Morning all. Yes, interesting markets. I've got just a little question to you. Do you know which stock markets made record highs last week? Anyone? I mean, probably the usuals. Uh, I'll put you out of your misery. It's the Stoxx Euro 600 broke all-time highs. So the Japanese Nikkei 225, for those of you who are of my age, and I'm not wishing to be rude or be ageist. I'm 65 and I've been around long enough to remember the Japanese asset bubble in the 80s, culminating in a high in 1989. Believe it or not, the Nikkei broke its all-time highs last week. And the last time the Nikkei was at these sort of levels, let's quickly put up JPN 225, that's the Nikkei. The last time it was here was in the latter part of 1989, 34 years. And I remember that Japanese industrial, super wealthy managers, CEOs were buying up this, buying up that. Everyone was buying each other, and it really just turned into a right bubble that has taken 34 years for this situation to be recovered. Of course, when you add back dividends, etc., obviously the return has been higher than where we're at the moment. But it's just quite significant that it's taken that long to break those highs that have stood for 34 years. Yeah. The Euro Stoxx 600 is top 600 stocks in Europe, and it's quite interesting how analysts and brokers give these names to groups of shares. But in the US, we've got the okay, what's driving the Nikkei, Owen? Mostly undervalued stocks, and they're still undervalued, apparently, according to several brokers who are pushing them. Some big names, heavyweight hitters like Warren Buffett from Berkshire Hathaway, buying into the trading houses. Those companies will benefit from a resurgence in the market. So it's almost like a leveraged play on the Nikkei. And obviously a weaker yen as well. So if you look at dollar yen, here we go, up above 150. It's a big old move. It's a big old move. Just make sure I'm in the right one here. It's a big old move, and with the yen that week, let's put the yen up again, dollar yen. There we go. So I was actually going to show you how far it's coming, but just showing you a chart, a monthly chart of the yen. So, the yen would be around sort of 100, 110, etc. But ever since the pandemic and the adoption by the Bank of Japan of their ultra loose policy, it's absolutely cratered the yen. Now they're able to get away with it. Normally, if you create your currency, you import massive amount of inflation. They've got away with it. I think they were just so reluctant, the Bank of Japan, to engage in what the West were doing in tightening rates, because they've done it twice before, and it just resulted in markets totally failing. Growth has been non-existent, really, and they called it the lost decade, but it turned out to be a lost 2 or even 3 decades in Japan. Yeah. Hi Srikanth, morning to you. Thanks for joining us. Apologies about the change in the timing, and I thank you for your understanding. So there we go. We want to know about Nvidia as well, says Samantha. So the record highs, we know that the S&P, the Nasdaq, so that's the tech-focused index, all hit record highs last week as well. And you can see the sort of bullish run when you look at the Nasdaq. It's a little bit, let's just look at the daily, would help. You can see this run since the start of the year. Several stocks have put on huge gains. The likes of Meta, Apple had done, but Nvidia is very much the standout stock. Nvidia, this chip maker, it released its fourth quarter results last week. The forecasts have been raised gradually, actually, in the run-up to the release of the actual announcement. I think it came out, was it? I think it was after or before the market opened on Wednesday. Anyway, whenever it was, it was a really strong set of numbers. 265% jump in quarterly revenues, and that exceeded all those lofty expectations, as I said. And it's this sort of almost frenzied, manic interest in AI, or artificial intelligence, that's pushed sales just so high. It really is a frenzy. And whilst Nvidia did not plan for the AI revolution when it was designing it's called the H100 AI chip. The frenzy, as major tech companies rushed to buy these chips, what it had done was to design a chip for crypto mining that needed a lot of capacity. But it's repositioned itself, and the market has repositioned it as well, and it's really taking advantage of everything it can. There will be other chip manufacturers, and some of the big heavyweight companies in the Magnificent Seven, as we call them, are investing in chip designs as well. But for the time being, you've got there's one stock, I think Meta, so that's Facebook, isn't it? Meta, Mark Zuckerberg's company, has put in an order for 350,000 of these H100 AI chips. And that, I tried to put it in the calculator, and I think it works out at about $15 billion. It's just extraordinary. All of it is extraordinary. Whilst this frenzy continues, Nvidia will continue to do well. Anyway, the results propelled Nvidia stock up 16%. What does that mean? Anyone idea? 16%? Market capitalization of $2 trillion. A couple of years ago, this stock was 200 billion. It was one of the big-ish stocks, but nothing like it is now. It's now the third largest company by market capitalization in the US, by definition, probably globally, actually. Higher than the likes of Amazon. We all know Amazon, and Meta, one I've just been talking about, the one that's put the order in for $15 billion worth of chips, and just behind the likes of Apple and Microsoft. Microsoft, I think, is still number one, done exceptionally well. Anyway, just extraordinary, with those Magnificent Seven, which is what Nvidia is part of, and that's what caused both the S&P 500 and the Nasdaq to make record highs. We were talking about the Stoxx Europe 600, and I told you about these sort of names that brokers love to give these groups of stock. In Europe, there is a group of 11 equities, and they've been nicknamed the Granolas. God knows why. Anyway, I think Goldman Sachs have nicknamed them the Granolas. Anyway, they're responsible for over 50% of the gains in the Eurostoxx 600. This is the Eurostoxx 50, but it sort of shows you the jumpiness in this market, and it's dominated by the likes of Sanofi, Glaxo, AstraZeneca, SAP, LVMH. These big super heavyweight stocks that have, a bit like in the US, have caused most of the gains so far this year. And obviously, you'll immediately think, well, what about all the other stocks? And that's where we talk about something called market breadth, where the number of stocks that are also part of that picture making new highs. And the market breadth, not surprisingly, like in the S&P 500, like in the Nasdaq, in the Stoxx Europe 600, it's not very good because it's been driven by just a few stocks. So anyway, there we go. Record highs across several markets. Who'd have thought? Who'd have thought, when we continue to caution about the battle with inflation, we had the Fed's minutes from last the previous meeting that was released last week, and it was a bit of a reality check for the markets, which have continued to adjust their interest rate expectations pretty much in line with what the Fed's expecting now. And anyone who was wondering what expectations are, you have to go to June now to get the first expectation of a rate cut from the Federal Reserve. Do you remember at the beginning of the year? It was March. Not a chance now. Not a chance on the 20th of March. It's more, there's a 97% chance. It'll be June, July, and September. By the end of the year, expectations are just for 3 rate cuts. We had 7 penciled in. What does it mean? The fact that they're not cutting rates so much, well, it's bolstered the dollar. It'll mean that corporates, mortgage holders, or anyone looking to take out a mortgage, anyone looking to borrow money, will not be benefiting from lower rates as much as they were expecting at the start of the year. Lower rates will be coming. They will be coming in the UK. Even the Bank of England suggested that there'd be 3 rate cuts this year, and that Mr. Andrew Bailey, the governor of the Bank of England, was happy what the markets were expecting. So I think there's just been this readjustment so far this year, and it's happening across the board, not just in the West, but the likes of New Zealand, the Reserve Bank of New Zealand, they're meeting this week. They were expected to cut rates, but there's been a bit of a tightening in the swaps markets that suggests that interest rates are not going to be cut as much as originally expected. That's across the board, and that's the path of inflation at the moment, global inflation, and what's happening with the in Yemen, and the attacks on shipping that are now having to be rerouted around the bottom of South Africa. That's really adding what, sort of 4 weeks cost to shipping, which it will pressure inflation in the months to come. Anyway, time will tell. I'm not going to try and guess or guesstimate what's going to happen there, but the battle is still on, as they say. Other markets, well, US dollar slipped a little bit last week. If we just look at actually we can look at the US dollar index. There we go. No, we can't. It's not working on there for some reason. I don't know why. Anyway, we can look at it here. So you can see the US dollar slipped, sort of touching nearly the month's low for February. And it's this readjustment that I've referred to in interest rate outlook. It looks as if it's run its course. And of course, you've now got speculation, as I've just mentioned, about when the European Central Bank and the Bank of England will be cutting rates, being the more of a driver last week to that slightly weaker dollar. Finally, oil markets, just very quickly. Crude fell last week, with most of the losses occurring Friday. Interesting to note, actually, that natural gas prices on Friday fell to levels seen before the start of the Russian war against Ukraine in, what was it, February 2021. And this is down to weaker demand for gas due to warmer weather, economic slowdown in Europe. And also there's been a sharp increase in LNG, that's liquid natural gas imports, especially from the US. Anyway, that has contributed to the gradual correction in natural gas prices over the last 2 years, which is good news for all us consumers who will be seeing our price cap reduced again in April, which is good news, unless you fixed like myself. But I fixed at a discount, so I'm going to be all right, actually. But I then go back onto a variable one in August. It's all a bit of a game, isn't it? Gold, I always get asked about gold. Gold sort of tracking the dollar, really, with the dollar weakening last week. Gold gained, $22. Yeah, just a weaker dollar helping gold along its way. There we go, Forex factories. So here we go, week beginning the 26th of February, the final week in February, and the start of March, 1st of March on Friday. Normally we get a non-farm payroll on the first Friday in the new month, but it's not when it's the very first day of the new month. So the Bureau of Labour Statistics will be getting that data and publishing it the following Friday, so the 8th of March. This week, yeah, we got the 29th of Feb, extra day. Gosh, yeah, leap year. So we have the 29th of February, only happens every 4 years. Aside from that, there aren't many key releases. I'd say the highlights are probably US consumer confidence, and this PCE data, this personal consumption expenditure. That's the big one for the Federal Reserve. That's what they use to monitor inflation. And we've also got one rate decision from the Reserve Bank of New Zealand. Anyway, let's have a quick run through. No key data on Monday. Tuesday, we've got durable goods orders. We look at the core durable goods orders. Curiously, Forex Factory give it a medium impact one, whereas the durable goods order they put high impact on. The core one is more relevant because that excludes transportation items like automobiles, cars to you and me, and planes. So when you get a lot of aeroplane orders, jet orders, these are very big ticket items and they really do distort the data. So as you can see, the headline number is minus 4.7, but the real number, underlying number, plus 0.2%. The dollar will be a bit sensitive to that. It used to be a really important release durable goods, but over the years it's sort of diminished in its sort of impact on the markets. And then we've got something called the Conference Board Consumer Confidence on Tuesday afternoon at 3 o'clock. First of two consumer sentiment readings this week. I guess persistent inflation is probably denting confidence a little bit in the consumer, but we've just been talking about those record highs in the stock market, which tend to offset negative influences. Stock markets riding high often bolster consumer confidence. The consumers feel a little bit better, a bit more wealthy, a little more positive. Wednesday, we talked about that, the Reserve Bank of New Zealand, or RBNZ. No change expected from this central bank, in common with other central banks, considering when to cut rates as inflation 10 is roughly heading back towards targeted rates. The swap rates, which are the forward rates in New Zealand, have firmed over the past 4 weeks, which sort of makes rate cuts a little less certain in New Zealand, bit like in the US, bit like in the UK and in the Eurozone. So pretty much the same sort of argument out there. We've then got this reading called the prelim GDP data. This is what tells us the value of all goods and services produced in the United States. It refers to the fourth quarter last year, which is October, November, and December. Good quarter. Prelim, actually, don't be misled by that. It's the second reading. They have an advanced reading, then a prelim reading. Anyway, it's unchanged. Tends not to have much of an effect on the market. It's what I refer to as a lagging indicator. It's telling us what has happened, not what is going to happen. I like to know what is going to happen or might happen. And then we got this G20 meetings. You might wonder what they are. It's the global, the G20 top 20 countries, including some invited guests, all meeting. I think they're meeting in Rio de Janeiro. What a great place to go and have a meeting. 2-day meeting, so they'll all be there on Copacabana Beach having a whale of a time. A big talking shop, really, and it doesn't have much impact on the markets at all. So you don't have to worry about that one. And then on Thursday, we have the prelim CPI readings for, well, this is the start of it this is Germany. We've actually got the actual overall numbers released on Friday, but you've got the likes of Germany is the more interesting one because it really does impact the euro and Eurozone assets, expected at plus 0.5% as inflation is ticking up there. Yeah. We've then got this PCE data that I referred to, the personal consumption expenditure. This is the one that the Federal Reserve looks at quite closely. So that's something that we as market traders will be sensitive to as well. If the Fed are watching it, we'll be watching it. Expected at plus 0.4%. Dollar and dollar assets will be sensitive to the release, and obviously they will have an impact on our markets as well. So Eurozone, UK, assets such as stock markets and bond markets. So that is definitely one to watch, probably the most important release of the week. So 1:30 on Thursday. Then we move to Friday, China manufacturing PMI data. PMI stands for Purchasing Managers Index. So it's collated monthly from purchasing managers at major businesses, and it's produced by the state and also by a private company called Cakesin. Cakesin have their own release, and it's actually higher than the state one. Anyway, they're all looking for a slight dip in manufacturing, whether it be above 50 or below 50. It's around that sort of area. And then that core inflation reading across the whole of the Eurozone expected to come in year on year at 2.9% for the flash reading. The headline, which includes energy and food, 2.5. Key one for the Eurozone. Yeah, I'm surprised it's not red, but there we go. That will affect the Euro and Eurozone assets and will impact UK assets as well. And then finally, actually two finalists. We've got in the US, we've got the ISM manufacturing PMI data, full of mnemonics. This Institute of Supply Management Manufacturing Purchasing Managers Index. What do you care? The fact is, it's about manufacturing. The fact is, manufacturing is getting close. When it gets to 50, it means it is expanding. And if you see from this graph, it's been below 50 for a rather long time, the whole of 23, and it's really struggled. Could this be a time when manufacturing does recover? Anyway, we'll find out by Friday afternoon at 3 o'clock. Then the final release that interests me will be this revised University of Michigan consumer sentiment. It doesn't tend to get revised, but when it does get revised, it will affect the markets. I've never actually seen it revised over the last sort of few months. Anyway, any revisions could affect the market, could affect the dollar and dollar assets. So there we go.